Look, I think there's a lot of positive things that can be taken out of the 6 months result, not only in terms of the underlying profit performance, but in terms of progress that's being made out of business transformation. But the other message is it's a hard segment to operate in, and shareholders will be fully aware of that. And it's going to take some time to transform this business into one that is able to adapt and respond to an environment which is dynamic and challenging, and the business needs to be able to be engineered to be able to do that. The core underlying profitability has been very positive. So yes, revenue's up, margins are up, costs have been taken down. What we are seeing is a significant negative impact of a weak Australian dollar and a weak Australian economy, which is reflected in the dollar. So year on year, the impact of exchange rates has been materially to our disadvantage, and that has had a drag on our overall profitability. But if we strip that back out, it's been a very positive move in our underlying profit performance. Di and the team have been working very hard on the balance sheet side of the business. If we look at where we are, stock levels are down, debt levels are down, operating cash flows for the 6 months were very, very positive compared to the last year equivalent. And the recognition is that we need to accelerate our stock turn. As we do that, we'll reduce our debt levels. And that's positive, so that's been achieved. We've got aggressive targets in place and we'll continue to drive towards those. The Christmas period, if we take November and December, year on year was positive. It delivered pretty much in terms of the budgets that we had set ourselves. There's always room for improvement. We're working in a very challenging environment. So all the things that we have achieved, we've got to continue to work on. We've got a business transformation program that's very clear in terms of what we're trying to drive and aim towards. Progress has been made on that, but it's a 2-year program, so there's still a lot of work we can do to focus on delivering the outcomes from that. So back in November we flagged the fact that to strengthen the balance sheet, which would strengthen the business, we would explore capital raising options. We decided to work our way through the November, December, that Christmas period before moving forward on that. So we've gone through that period of time. Not only have we seen sort of good positive performance out of the business, but we're in a position now where we are looking at a number of options. We've been approached by organisations who are interested in taking an interest in Pumpkin Patch. I think it's incumbent on us as a board to pursue those options. They may well be in terms of acquisition of part or all of the business. It may well be in terms of injection of capital into the business. We have no fixed view as to what the outcome will be. We're going through a process now. What we will do is derive an outcome which is in the best interest of all our stakeholders. I would imagine that we should be clear in terms of the outcome of this process within a 6-month period. Pumpkin Patch has a brand, has a very strong future, as it's had a very strong past. I think we just need to recognise that as a business and as an organisation, we need to adapt quickly and significantly to an environment which is substantially different from where it was 25 years ago, 15 years ago, 10 years ago and 5 years ago. So that's all about the transformation of the business. I mean, we're here to drive the best value that we can for our shareholders and for all our stakeholders. That includes our staff, it includes our suppliers, it includes our customers. And so we're pretty intent on that. And the reason we're going through what is a material change in the business is to be able to deliver it.